Something changed this week that affects the retirement income of millions of people across the UK. No press conference, no ministerial statement, no front page. It just happened, quietly, in the background. And the people it affects most, they have absolutely no idea. I'm going to tell you exactly what changed, who it affects, and what you need to do right now before a window closes that you didn't even know was open. Stay until the end. The final section has specific steps and phone numbers that could directly protect or increase your income this month. Let's start with what has actually happened, because the details matter here. This week, the DWP activated a series of payment and processing changes that take effect from the first full payment cycle of April 2026. This isn't one small tweak. It spans the state pension uprating, pension credit recalculations, housing benefit interaction rules, and what the DWP is calling its pension payment modernization program. And here's why it happened quietly. These changes don't require new legislation. The decisions were made months ago, and frankly, the government knows that pension changes generate anxiety. A quiet rollout means fewer headlines, fewer questions. That might work for them. It doesn't work for you. So let's fix that right now. The biggest change that went live this week is one you may have already noticed in your bank account, or may notice in the next few days. The April 2026 state pension uprating is now live in the DWP's payment system. If you're on the full new state pension, your new weekly rate is approximately $230.25. That's an increase of around $18.70 per week compared to what you were receiving before. Over a full year, that's nearly $970 of additional income. If you're on the old basic state pension, meaning you reached state pension age before April 6, 2016, your new full weekly rate is approximately $176.45. That's an increase of around $14.35 per week. Now, here's where it gets important. Some of you are going to look at your bank statement in the next week or two and see a number that doesn't match either the old rate or the new rate, and you're going to worry that something has gone wrong. Here's why that happens. The DWP pays your state pension in arrears. You're paid for time that has already passed, not time ahead. When the uprating activates mid-cycle, which is effectively what happens every April, some people receive a blended payment, part calculated at the old rate, part at the new rate, depending on exactly where your payment date falls relative to April 6th. If that happens to you, don't panic. Check the breakdown in your most recent state pension award letter, which should have arrived in March. Compare those figures to what has landed in your account. If there's still a gap you can't explain, call the pension service directly on 0800-731-0469. They'll walk you through exactly how your payment was calculated and confirm what to expect going forward. Get this checked now, not in 3 months. An early error is a correctable error. Now here's where it gets more complicated. And more important, the state pension uprating doesn't just affect your pension payment. For millions of people, it triggers a chain reaction through other benefits they receive at the same time. Specifically, pension credit. Pension credit tops up your weekly income if it falls below a certain threshold. When your state pension goes up, the DWP automatically recalculates your pension credit entitlement. For most people, when the pension goes up by $18.70, the pension credit comes down by roughly the same amount. The total stays roughly the same. That sounds neutral. It isn't always. Here's why that matters. Pension credit isn't just a top-up payment. It's a gateway. It unlocks free TV licenses for the over 75s, maximum housing benefit, council tax reductions, the warm home discount, and the thresholds for those linked benefits don't always move in perfect lockstep with the pension credit threshold. So for people sitting right at the edge of those thresholds, and there are more of those people than you'd expect, a small shift in pension credit entitlement can have an outsized effect on the total package they receive. I want to be very specific here because this is where real financial harm is happening right now. There is a group of people for whom the April uprating has pushed their total income fractionally above the level at which they qualify for maximum housing benefit. For those people, the state pension increase hasn't just been offset by a pension credit reduction. It has triggered a housing benefit reduction that in some cases is larger than the pension increase itself. In those cases, a pensioner is financially worse off in April 2026 than they were in March 2026. Despite receiving a higher state pension, if you receive both pension credit and housing benefit, check your April payments carefully. If your housing benefit has come down, contact your local council's housing benefit team immediately. Ask them to explain the recalculation in writing. Ask specifically whether it's a result of the state pension uprating feeding through your pension credit assessment. If the numbers don't add up, you have the right to request a formal review. It costs nothing. Use it. There's a third change that activated this week. This one could be working in your favor, but only if you know about it. Because of the April uprating, some people have become newly eligible for pension credit elements they didn't qualify for before. I know that sounds counterintuitive. Your income has gone up. How does that make you newly eligible for a means-tested benefit? Here's how. The uprating changes the relative balance between your pension income and the government's assessed living cost thresholds. For some people, particularly those with a significant additional state pension component, or those who've recently had a change in circumstances like a bereavement, a partner reaching pension age, or a change in caring responsibilities, that shift has moved them into entitlement they just missed before. The same applies to people receiving certain disability benefits alongside their state pension. The disability premium elements within pension credit can interact with the uprating in ways that create new eligibility. And here is the critical part. If you're newly eligible, nobody calls you. Nobody sends you a letter that says, "Congratulations, you now qualify for an extra $40 per week." The entitlement just sits there, unclaimed, while the money you're owed accumulates in government accounts rather than your bank account. The way to find out if this applies to you is simple. Go to gov.uk and use the Pension Credit Eligibility Checker, or call the Pension Credit Claim Line directly and ask them to assess your current entitlement. The call is free, the assessment is free. And if it turns out you're newly eligible, your claim can be backdated by up to 3 months. 3 months. Do that check today, not next week. Let me make this real for you, because sometimes the numbers don't land until there's a person behind them. Picture a 72-year-old man. Let's call him Brian. He lives alone in a rented flat in the northwest of England. Worked 38 years in the public sector. Retired at 67. Brian receives the full new state pension, plus a modest defined benefit pension from his former employer, about $95 per week. His total weekly income before April was around $311. Brian has never claimed pension credit, never claimed means-tested support of any kind. Why would he? He has an employer pension. He assumed, reasonably, that it put him well above any qualifying threshold. He was wrong, but he had no way to know that. Here's what Brian doesn't know. His local council revised its council tax reduction scheme earlier this year. Under the new rules, pensioners with income between $300 and $350 per week qualify for a 40% reduction on their council tax bill. Brian's annual council tax bill is $1,190. A 40% reduction is worth $476 per year. Brian has no idea this exists. The council sent a notice about the scheme change in January. It went out with the council tax demand. Brian looked at the total figure, filed the paperwork, and moved on. Like most of us do, Brian is leaving $476 a year unclaimed. Not because he's not eligible, not because the process is complicated, because nobody connected the dots for him. Brian isn't a rare case. Brian is hundreds of thousands of people across the UK right now. The people just outside the headline thresholds. The people with a small employer pension who assume that rules them out of everything. The people who have never been told to check. If Brian's story sounds familiar, if it sounds like you or someone you know, the answer is simple. Check, just check, it costs nothing. 10 minutes. The worst outcome is you confirm you don't qualify and you move forward with certainty instead of assumption. Here is your complete action plan for this week. Specific steps. Specific numbers. First, check your bank account or payment statement this week. The full new state pension should be approximately $230.25 per week. The old basic state pension should be approximately 176.45. If what has arrived doesn't match, if it looks lower than expected or unusual, note the exact figure and call the pension service on 0800-731-0469. Don't wait and see. An error caught early is an error corrected quickly. Second, if you receive both state pension and pension credit, check your pension credit payment for April. It should have been automatically recalculated. Your total, state pension plus pension credit combined, should be roughly the same as before or slightly higher. If your pension credit has dropped by more than the state pension increase, call the pension credit helpline on 0800-99-1234 and ask for a full breakdown of your new assessment. Third, if you receive housing benefit and your April payment looks lower, contact your local council's housing benefit team immediately. Ask them to explain the change and whether it's connected to the state pension uprating feeding into your pension credit. If you believe the reduction is wrong, request a formal reconsideration. You are entitled to do this. Fourth, if you haven't checked your pension credit eligibility in the past 12 months, go to gov.uk right now and use the pension credit calculator. Your circumstances may have changed. The thresholds may have changed. The April uprating may have shifted your eligibility in ways you're not aware of. 10 minutes today could mean months of backdated payments. Fifth, if you received a DWP migration notice in the past 6 to 8 weeks, a letter saying your legacy benefit is ending and you need to claim universal credit, and you haven't acted on it, call EO 800-328-5644 right now. Not after this video. Now, open this in another tab, pause it, make the call, come back. When the deadline on that letter passes, your benefit stops. It doesn't pause, it stops. And restarting it after the fact is far harder than claiming before the deadline. Sixth, check your council tax bill and your local council's website. Many councils updated their council tax reduction schemes in January or February, and the new rates apply from this month. If you're on a fixed pension income and you haven't specifically checked whether you qualify, you may be missing a reduction you're fully entitled to. Contact your council's benefits team and ask them to assess your eligibility. And finally, the step that multiplies everything else. Share this video today. Before you close this tab, before you put your phone down, send it to a Facebook group, a WhatsApp chat, a parent, a sibling, a neighbor who you know is managing their retirement income on their own. The people most affected by what has quietly activated this week are the people least likely to find this information on their own. You are their connection to it right now. That's exactly what this channel is here for. The moments when the system moves without explaining itself. When changes land without warning, when the people who most need to know are the last to find out. Check your April payment. Check your entitlements. If something looks wrong, use the numbers I've given you. The window on several of these deadlines is open right now. Don't let it close without acting.